Did you know that Salina, one of the nation's fastest growing cities, is on the brink of a transformation with a billion-dollar retail and entertainment hub? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. In the rapidly expanding city of Salina, Texas, a legendary landbroker's vision is coming to fruition in the form of a billion-dollar retail and entertainment hub. This ambitious project is expected to reshape Salina, which is currently recognized as the fourth fastest growing city in the United States, by blending modern amenities with the charm of a small town. According to a report by Ayush Gupta from the Dallas Business Journal, this development is a significant milestone for the city, promising to attract new businesses and residents alike. The project, spearheaded by prominent landbroker Rex Glendenning, is part of a broader vision to enhance Salina's appeal by integrating retail, entertainment, and residential spaces. With construction ramping up, the development is set to include a new Walmart supercenter, which will further bolster the area's economic growth and provide a variety of shopping options for the community. This development mirrors trends seen in other rapidly growing areas, such as Kitchener-Waterloo in Ontario, Canada, where mixed-use developments are becoming increasingly popular. These projects not only cater to the growing population, but also provide a more integrated living experience, combining residential, retail, and recreational spaces. The success of such projects in Canada highlights the potential for similar developments in the United States, offering insights into cross-border commercial real estate strategies. In a major development for West Charlotte, the River District has reached a significant milestone as its first residents begin to move into the area. This marks a vital step in the realization of the expansive project, which has been in the planning and development stages for several years. The River District, developed by Crescent Communities, is set to include 2,300 homes, 2,350 multifamily units, and millions of square feet of commercial space. This project is part of a broader effort to transform the area into a vibrant mixed-use community, combining residential, retail, and recreational spaces. The River District's progress highlights a growing trend in urban development, where mixed-use projects are increasingly favored for their ability to create integrated communities. This approach is not unique to Charlotte. Similar developments are gaining traction in regions such as Kitchener-Waterloo in Ontario, Canada. There, the trend towards mixed-use spaces is also evident, as developers aim to cater to growing populations by offering a blend of residential, commercial, and recreational amenities. By drawing parallels between these projects in Canada and the United States, we can observe a cross-border relevance in commercial real estate strategies. Developers in both regions are recognizing the benefits of creating spaces that meet the diverse needs of modern residents and businesses. As the River District continues to evolve, it will serve as a model for other cities looking to revitalize underdeveloped areas and foster economic growth through mixed-use developments. The Exton Square Mall in Pennsylvania is set for a major transformation as developers have outlined a timeline for a phased overhaul of the expansive 75-acre site. According to a report by Paul Schwedelson from the Philadelphia Business Journal, this redevelopment project will begin with the construction of a 50,400 square foot mainline health building, marking the first phase of the ambitious mixed-use development. This project aims to revitalize the area by introducing a mix of residential, retail, and healthcare facilities, creating a vibrant community hub. The redevelopment of Exton Square Mall is part of a broader trend towards mixed-use projects, which are increasingly favored for their ability to create integrated communities that cater to diverse needs. The planned transformation of Exton Square Mall mirrors similar initiatives in regions such as Kitchener-Waterloo in Ontario, Canada. There, developers are also focusing on mixed-use developments to accommodate growing populations while enhancing the urban landscape. By providing a blend of residential, commercial, and recreational spaces, these projects offer a more holistic living experience. In examining these cross-border developments, it is evident that both Canadian and American developers are recognizing the benefits of mixed-use spaces. These projects not only address the demands of modern urban living, but also contribute to economic growth by attracting businesses and residents alike. As the Exton Square Mall redevelopment progresses, it will serve as a model for other cities looking to rejuvenate underutilized areas through comprehensive planning and development strategies. Kamehameha Schools has unveiled a $124 million plan to transform Kyaohu Bay with a resort, plaza, and cultural center. This ambitious project is designed to balance cultural preservation with modern amenities, providing both residents and visitors with a unique experience that honors the rich history of the area while embracing contemporary development. According to Alexander Lugo from Pacific Business News, the plan includes a combination of retail and recreational spaces alongside the cultural center, aiming to create a vibrant community hub. This development initiative by Kamehameha Schools represents a significant investment in the region, reflecting a broader trend towards mixed-use developments that incorporate cultural preservation elements. Such projects are becoming increasingly common as developers seek to create spaces that not only meet economic and residential needs, but also respect and celebrate local heritage. In the context of commercial real estate, this project mirrors similar developments in regions like Kitchener-Waterloo and Cambridge, Ontario, where a focus on integrating cultural and historical elements into modern developments is gaining traction. The Canadian approach often involves collaboration with local communities to ensure that new developments contribute positively to the cultural landscape, a strategy that is being echoed in this Hawaiian project. By comparing these developments, we can see a cross-border relevance in commercial real estate strategies. Both Canadian and American developers are recognizing the importance of preserving cultural heritage while advancing modern infrastructure. This approach not only enhances the appeal of the developments, but also fosters a deeper connection with the community, attracting both residents and tourists alike. Turning our attention to Philadelphia, the city is witnessing a significant decline in the value of its office buildings, a trend that's having profound financial implications. According to Jake Blumgart and Ryan W. Briggs from the Philadelphia Inquirer, the falling assessments of these properties are impacting local government finances, the school district, and business improvement organizations like the Center City District. It appears that now might be an opportune time for those looking to invest in office buildings in Philadelphia. Several office buildings in Center City have been sold recently for less than half their previous prices and assessed values. A notable transaction was the 29-story tower at 2000 Market Street, which last sold in 2018 for $107.7 million, but was recently purchased for $45.5 million by Maryland-based Tide Realty Capital and New York's CSB Holdings. This trend is not isolated, as many large buildings in the city are experiencing financial distress. An analysis of city tax assessment data revealed that the overall value of Philadelphia's large office buildings has declined by 28% when adjusted for inflation over the past 6 years. This drop is notable as it affects property tax revenues significantly. The situation is further complicated by ongoing challenges to tax assessments, which are used to calculate property taxes. Last year, about 1 in 5 commercial properties filed new appeals to lower their official valuations, a trend that continues to impact city revenue. The city's finance director, Rob Dubow, noted that the falling office building assessments have cost the city about $6 million annually. The school district, which relies heavily on property taxes, is feeling the impact more acutely, facing a projected deficit of $15 million in the next fiscal year, rising to $2 billion in 5 years. This financial strain is exacerbated by the declining office building values, which contribute over $10 million annually to the district's losses. However, there's a glimmer of hope for Philadelphia's office sector. Despite the current challenges, some experts believe that the market could rebound. Real estate services firm CBRE reported that almost 23% of Center City office space is vacant, yet the city hasn't experienced a mass exodus of major office tenants. Instead, companies are reducing their square footage as hybrid work models require less space. Analysts like Tom Weitzel from JLL and Brent Hutchinson from the Building Owners and Managers Association remain optimistic, noting that a return to office is gaining momentum and that discounted sales may allow new owners to renovate and offer competitive rents. There is potential for the market to recover, with some observers noting green shoots of optimism. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.